Hi, and welcome to another interview in our Venture and Capital interview session. Today, I'm joined by Justin Lipman, who's an investment director at Equity Venture Partners. And so I'm really looking forward to having a discussion with Justin. I just note that him and his team recently made an investment into one of our existing companies, funding.com.au. Now, I know you're not directly involved in that one, but keen to sort of obviously, firstly, welcome.
Thank you.
And so just to kick off, do you want to give a bit of a background about yourself and about EVP?
Yeah, sure. And thanks, Steve. It's great to virtually be here, and thanks for having me. Equity Venture Partners, we're a Sydney-based venture capital fund. We have just over 70 million under management, invested across just over 30 portfolio companies, early stage tech investors. But really our focus within that category is on software investing, and even within that category, a focus on B2B software opportunities, to be honest. We're typically investing up to $5 million at a time into businesses with product in market, earning real commercial revenues, but early in stage. There might be a 10 to 20 person business of that ilk. And typically our style is fairly active. We roll up our sleeves and try to support founders on their journeys. That's sort of a bit about what we're up to.
Fantastic. So just on the rolling up of sleeves and sort of getting active, what does that look like? Because you guys have really got an impressive sort of team behind you. You've all got sort of unique backgrounds. So just sort of, what does that look like for you guys and how you get behind companies?
Yeah, it's a good question. And founders ask us all the time. I think it really varies company by company and stage by stage. So often at the early stage, it's as much as providing an extra pair of hands across all facets of the business, whether it be recruiting or budgeting or more strategic stuff, even sort of sales and marketing capability. And then typically as the companies mature a bit and they bring in sort of exec teams or management teams across the board, I suppose the need for a more day-to-day involvement sort of dissipates somewhat. And typically at the later stage, it becomes more of a board oversight, strategic input and the like. So at the bare minimum, we take board seats with all of our investments, not for control, and that's not for any control reasons. It's just as a sort of a vehicle and an avenue to be involved. But I think it really interesting, almost counterintuitively, as the companies mature, the involvement becomes somewhat less as compared to the super early stage.
Interesting. And I imagine at the time you're investing into companies, they're on a fairly significant growth trajectory. Right. So I imagine they're obviously hiring a significant amount of people at that time. What do you see some of the, common mistakes that the founders typically make where they're in that growth mode and they're going through that sort of mass hiring process?
Yeah, again, a good question. I think, certainly human capital is the biggest challenge that all of the companies you work with face. It's obviously where you're investing in a software business with only intangible assets, effectively, your business effectively is underpinned by your human capital almost in its entirety. And to that degree, decisions are important. I think, with some learned experience, at the early stage, you need quite a unique sort of individual that's willing to sort of roll up sleeves, if you like, be fairly scrappy and hustle a little bit.
And work across multiple roles.
Indeed. And I think there's that old saying about deciding which fires to focus on and which fires to sort of put out, because at the early days, you simply don't have the resources to deal with all of them. So I think to some degree, we've seen founders hire, big salaries, big CVs in the past, with seasoned operators with 20 years plus experience, and they sort of come into a role where, rather than managing people or working to a defined playbook or a defined sort of value proposition from a more mature business, they're really having to create that value proposition and win customers in a sort of a different way. So I think, interestingly enough, sometimes, again, a bit unusually, or maybe not as you would expect, we found, hiring potentially less experienced people that have different motivations, willing to come in and get their hands dirty, if you like, to have better impacts. But I think, to be honest, if we knew the answer to some of the human capital challenges, we might be in a different position. It's the number one sort of pain point for all companies.
I know from my own experience. I said I went through that process myself, and I know some of the mistakes I made on the HR side. And I know that, like, for me personally, about a year ago, we put a strong effort on really sort of changing a culture aspect, basic, and really sort of focusing on what are the key values that are sort of core to our company, and then sort of going about that building of that process. And for me, I'm so glad we did that work, because when it came to this sort of last 3 months, it meant our team was agile enough to sort of reshape. And I sort of think back then, and I think how to like, we actually brought in a talent person to assist us, and I'm thinking, how do companies do it without that?
Yeah, it's true. And I think the network in the startup ecosystem is important in that regard. And to be honest, it's something we try to fill some of that gap for our portfolio companies, in that we have a bit of a bench of talent, and we have a bit of a network of people that we can link into processes, even providing sort of an almost outsourced HR functionality to portfolio companies as required. But yeah, 100% agreed. It's certainly a challenge at the early stage.
Now, you mentioned something that very few people mention when I have discussions with them. It's only been sort of one other person, and that was because it was specifically their function. You actually mentioned the word sales. It's really funny. You do so many interviews where people are talking about their investment thesis, but no one ever mentions about, okay, we like to get into a company and work on the sales process. Now, obviously, you said most of your investee companies are B2B. What are some of the key things you've learned for early stage companies about discovering what is that B2B sales model that works for them?
Yeah, again, typically one of the number one challenges we work with. So the point at where we invest, typically a company will have product in market, they have their first customer, maybe they have their first 1 or 2 sales reps. But typically at that point, they don't have things like repeatability in the sales cycle. They haven't really nailed a sort of at scale value proposition that applies to, given personas across all segments or all sectors of industry. So yeah, to your point, that's probably the number one thing people are working on. And I think something that's maybe overlooked, which we try to over-index on a little bit, is in relation to product marketing, and it's sort of in the software space. I think not enough. A lot of founders don't make enough of what value their product brings to market. Yeah. So the incentive structure for a enterprise or a business to purchase software or change behavior internally is actually really skewed to the downside, in the sense that if I'm a mid-level manager at a big enterprise and I incorporate a new software technology and it goes wrong, the impact of that going wrong is both immediate and can be very significant, versus the upside for that technology change can be quite incremental and long run, in the sense that you have a small positive benefit over a long period. So the incentive to changing behavior really is skewed to the downside, in that there can be significant consequence getting it wrong and not much upside. And I think really the task at the early stage, where you don't have brand, you don't have like hundreds of customer logos to rely on, you don't have a nailed sales playbook and 500 sales reps like the Salesforce engine or globally that sort of own the scripts and the narrative. I think the challenge is flipping that incentive structure as best you can with product marketing to really bring to the front what value your product is providing, and try to almost flip the incentive such that the upside is both immediate and significant, and the downside is potentially minimized and long run. And maybe, not to get too grainy, but interestingly,
definitely go grainy.
Okay. I think interestingly, during sort of the coronavirus period that we're all experiencing, there's been an interesting flip in that incentive structure, in that while previously, as we spoke about, there was a big skew to the downside. Now the impact of changing or adopting a new technology or changing a behavior, the positive impact is immediate and significant. So think about implementing Zoom or Slack in your business. You can still run your organization and immediately people are happy. And equally on the downside, as people, face a little bit of dislocation in their personal lives, they're potentially willing to forgive, some difficulty and some sort of change process behaviors at the beginning, and some complications to a new technology and a change. So interestingly, the whole incentive structure for purchasing software inside an enterprise has been more or less flipped to the upside. So I think, we spend a lot of time with our companies trying to articulate how can you work through that incentive structure? How can you make it really easy for a manager inside a big enterprise to purchase your software? And interestingly, we're finding coronavirus almost providing some tailwinds in that regard, which is, surprising.
I think we'll get onto sort of how coronavirus sort of impact you. So just digging a little bit deep, because I said I'm fascinated with sales. I'm fascinated with the marketing process, and I'm also fascinated with the sales process. So when you're helping them sort of build that, and you mentioned you're obviously talking about going to enterprise, right? So you're obviously getting towards a CEO of a small to medium-sized business is probably easier than if you're going to a sort of enterprise and dealing with sort of managers. I always love the saying of no one got fired from from hiring IBM or engaging IBM. But also I do love that, sort of in conversations with Microsoft and some of the other groups, how they sort of try and open up to their partner, or even Kaspersky is another one who open up to partners. Have you found that at all helpful for some of your investee companies, like those sort of types of setups with larger corporates?
Yeah, absolutely. The partner channel has been, and the integration channel has certainly been, enormous for most of our businesses. I think, a couple of comments, but the B2B SaaS space that we're really playing into is all about integration and collaboration. I think most businesses have woken up to sort of, by working together with adjacent software solutions, it's a better customer experience and all businesses sort of benefit. So we have a number of portfolio companies that effectively go to market as a package. So for example, in the accounting space, if you're an accountant looking to build a cloud sort of modern practice, you use Xero for your accounting, you use Receipt Bank for some of your day-to-day, and then you use Praxis Ignition to engage with your clients. And sort of those three firms have experienced great outcomes by sort of winning customers collaboratively with respect to retention, lifetime value of customers, and all the rest of it. So I think, the partnership play for us has been significant. The other comment, just to pick up on something you were mentioning there, is when we think about enterprise sales, it's very much becoming more akin to mid-market or SMB type B2B sales processes, in that very rarely now are we selling to the C-suite executives, and bottom-up sales in the enterprise is now it's a long-run trend, but almost overnight it's been accelerated. Yeah. So now when you sell to a big enterprise, it's really common that you might win a particular division or a particular team with a mid-level manager that purchases, not by way of procurement, but with a credit card pretty instantly. And we found that sort of bottom-up process to be really effective. And I think the partnership play in those markets is also very helpful, in that most of the price points of these technologies are no longer, multi-million-dollar long-term contracted type revenue streams. They're often per user pricing on a month-to-month basis, akin to, Slack or Zoom, etc. And it's just a whole different way of selling. It's not about steak dinners and sort of relationships, and it's much more about product marketing, almost like the consumerization of the enterprise, if you like.
I love that there's three things you've already sort of touched on that sort of ring true to me, as far as I love that obviously partnerships and integration is a key one. It does also sound like it's very much product led. So that product can sort of get through into a company, into sort of one, into a person. I imagine there's a whole bunch of networking that goes along with that. And then you sort of think about the upside for these companies. And I just think that if you could, as a founder, if you can sort of penetrate that first wall with that, I imagine it's easier than going into the other divisions in that company.
Yeah, indeed. And there's, some really great anecdotal stories of that. I think safety culture, a local Australian success story, and what Luke's building over there is probably the best example we have locally, in that, they really were effective in building groundswell, sort of fairly low-level employees at McDonald's and some of the world's largest corporates, just using the product and using checklists, which was their product internally, and then, didn't really have a sales function until very late in their journey. It's still today they have a nascent sort of sales function. And I think it's a strong position to be in when you go to head office of McDonald's and try to sell them a very large enterprise style subscription agreement. And you can sort of go in there with some large percentage of the user base already using your product. It's a really strong sort of sales position. So totally aligned on that one.
And now let's put your investor hat on, right? So as the investor, when you're looking at a company, what sort of signals are you looking for that says, okay, this is interesting. Like, this is interesting what's happening with this business. Like, I'm sure you've got it to a science where within, let's call it, I was going to say 30 seconds, but that's probably aggressive. In a few minutes, you know what you've seen that thinks, okay, I'm going to look further.
Yeah, maybe. I wish it was that simple. I think
just the first impression look.
Yeah. It's true that Malcolm Gladwell's Blink book talks a lot about it, and yeah, there certainly are first impressions. I think probably in that regard, the most obvious thing is we're really looking for industry insiders that are deeply ingrained in a particular sector or vertical, that have like a learned experience of often decades, that gives them a unfair advantage to winning a particular opportunity or market. And I think it's sometimes quite hard to test for that, to be honest. But you start to realize fairly quickly in a conversation if someone is genuinely motivated to solve a solution that they are incredibly connected to or not. And I think a lot of venture investors talk about it's a mental model of like an idea maze, where you sort of sit down with a founder and you keep walking further and further into a maze. And then eventually it comes to a point in the meeting where we've sort of expired all of our questions and we've asked them all the questions I could possibly think of. And then the founder sort of turns around to you and says, more or less, thanks for your line of questioning. That was interesting, but these are the real challenges we're facing, and these are the real difficult tasks we're grappling with. And sort of these are the questions you should have asked. And I think it almost comes across as, they're an industry expert, they really understand the space. And for us, what we're looking fundamentally to back is folks like that, where in our view, it's relatively difficult to build a product that solves an actual problem. And it's relatively easier to build a sales and marketing capability alongside that and build the commercial side of the business. Yeah. So a lot of our sort of best investments have been product led. One of our better investments is a business called Deputy. When we met that business, they had product in market, thousands of global users, no marketing, no sales, really no commercial model. They just had a product in market that had incredible referral and genuinely solved the need that people were so happy with that they just told their sort of mates about it. And I think those are the type of playbooks, when you observe that, there's an authenticity to the story. And I think those would be that would probably be the number one criteria for us.
And so that's at a company level. And then if we dig down to the founder, right, what are you looking for in that? You mentioned one thing as far as you like it when a founder throws out additional challenges than what you ask for. I think that's a good, I've never personally tried that one, but that's an interesting one of sort of trying to add to more potential questions you could be asked in the process. What are you looking for in founders, just as and the team that they're working with?
Yeah, so again, that learned experience is absolutely critical. Yeah, I think beyond that, the point at where we get excited about something is, when it's moved beyond the idea stage and it does have that commercial traction. Like, we have a bit of a motto internally that products have no value, only customers do, and that's the belief for us in that. We see a lot of founders that build exceptional products that don't really have a customer set and haven't really identified their market opportunity. So I think in addition to founders themselves or sort of early teams having some unfair advantage to a particular market opportunity, we're looking for them to have backed it up with real sort of commercial traction, a real customer data set that we can rely on as a proxy, effectively, that the product does what it's meant to on the tin. Like, we invest across any industry and any vertical. So it's really important for us that we can, pick up the phone and speak to 20 customers and they can give us really great feedback, to ensure the product works. So I think that's probably the perfect combination, a mixture of learned unfair advantage and then, early commercial traction where your customers become really strong advocates.
Okay, now this is not me, but I'm just going to use this example. Now, if you're a founder that's very strong on the technology side, don't like humans so much, right? Which is we've definitely come across. What would be your feedback to them as far as if you feel like you've got a great product and you're in that sort of commercialization phase? What's your sort of feedback as far as what are the milestones that you're going to be looking at that basically sets off a trigger in your head?
Yeah, I mean, good question. So I have a couple of comments. I think firstly, the way of building a business today is quite different, and it's certainly possible to build a very technical-led sort of strategy, if you like, successfully. In that you build it's product-led, you put a product in market, and we're seeing a lot, particularly in spaces like data and certainly deep tech, where the sales process is certainly different, and you don't need that sort of friction or that sort of interpersonal contact. I would, so that's point number one. It's certainly possible. I think, point number two, though, we found across the board that, building the commercial side of the business is probably more important than building the product side in some regards. As long as you've built a solution to a genuine problem, you've solved it, people, early customers really like it, pretty quickly you sort of need to flip towards the commercial sales model to be successful. And we in our minds, we couldn't really overstate the importance of a balance in your organization, in that you can't just be building product for the sake of it for a long time. At some point, you're going to have to bring in capability or yourself. You're going to have to sort of bridge that gap, if you like, to sales and marketing and acquisition generally. So, again, it's possible to do without sales orgs. We've seen it, a number of times. Some of our companies, don't have any sales folks, and they're quite successful. But equally, I wouldn't shy away from building some friction into that sort of acquisition process. And it's not something, we shy away from ourselves.
And so you're, a lot of the companies you're working with, you said they've already got some sort of growth rate. They've already sort of product in market. Are they just operating at that time sort of in Australia or starting to go overseas? Or are you specifically looking at companies that are already sort of got some sort of international capacity?
Yeah, we actually don't have a strong mandated bias on that point. I think for most founders that are looking to build businesses that can sustain, doubling year on year for a very long period, you sort of need a market opportunity of some scale to support that long-term growth, right? So in the Australian context, there's few market opportunities that could sustain that type of business. And, pretty quickly, most of the founders we work with, if they're not global from day one, they're certainly sort of thinking through next horizons and next geographies, beyond the short term. And I think it's really just a question of market size. So there would be a few local opportunities, maybe food and hospitality, and some industries like that. But generally, I would guess that almost all of our portfolio companies earn a majority of revenues outside of Australia, to be honest.
Now, it's taken us about 20 minutes. So we'll finally get onto an area, everyone wants to talk about as far as how have things changed sort of for you over the last sort of 3. So for you on the investor side, how's your life different now to sort of, let's go 4 months ago? And how do you think it'll be different sort of 3 months from now?
Yeah, it's certainly different. And I think the whole, the venture community, the first thing they did was they came out and they said business as usual and it's all good and we're still investing. And we are still investing, but I wouldn't really call it business as usual. And in my mind, that's a bit overblown, I think. We've already seen private capital markets tighten a little bit, to be honest.
Yeah.
I think raising capital locally or globally really is more difficult today. And looking forward, my expectation, last time we had this in the GFC and even sort of times before that, there was a bit of a lag for the effects of public equity markets and general sort of economic slowdown to come through our venture community and the startup ecosystem. So that's my expectation. I think we're already seeing a slowdown in investment rates. We're already seeing some valuations come off. Just quickly, Y Combinator, which is one of the global accelerators, probably the biggest accelerator in the world, valuations across their cohort of, I think, 260 companies last month, valuations were down around 40% already. So I think already we're seeing that play out. And I think, to be honest, 2021, I think will be a tough time to raise capital generally. And I think that's my prediction. I think the other comment there is that there's been a real bifurcation between the types of companies we're looking at. As a result of most startups playing into frontier technologies and really trying to identify long-run tailwinds to play into. So trends around, remote education, telehealth, online retail, all the stuff that we've known about for decades that have been accelerated overnight.
Yes.
Most startups and venture investors try to position themselves into those long run trends. And we're really seeing that bifurcation now where about half the companies we're seeing are, to be honest, almost unaffected by coronavirus because they're supported by this exogenous effect, which they didn't plan for, but it's, they're positioned well. And then about half the companies are, having a pretty tough time. So my expectation is that capital will always be available for the companies playing into the correct trends. But for those that aren't or experiencing sort of a short-term dislocation, it might be a little bit trickier.
Yeah. It's one, as soon as it happened, I said, I'm sure you did the same as me. I was jumping on every sort of webinar to sort of understand what people were thinking. And also the other part was I was just trying to have as many conversations. And it was very much on webinars, it was, you're right. People were saying it was sort of business as usual. In private conversations, it was, we're protecting our companies first, making sure they've got capital, making sure that, understanding, getting their sort of thesis around, okay, who's going to be most impacted, who's going to be least impacted. And then the other funny one is that, I'm hearing there's some companies that are, their sales are just going through the roof. Some of their online sort of marketplaces, as you mentioned, telehealth. And I had a friend of mine that was running a healthcare business, and he said some of his sales, because obviously people were buying more sort of vitamin supplements, and he said their sales were just going through the roof. So, there's always going to be those two sort of sides. But for you, looking at new opportunities, like I assume the bar is now higher at this very point in time, and most likely for the next sort of 3 months is sort of trying to sort of understand what sort of comes next.
Yeah, I think that's true. Our approach to B2B software mitigates some of this a little bit in the sense that most of our companies monetize by way of long-term contracted subscription revenue streams. It's almost annuity style income. So it's somewhat immune to sort of short-term volatility and fluctuations. Nevertheless, I think maybe the context is that there's a much sharper focus on underlying unit economics and the underpinnings of profitable economic models, and ensuring that growth is coming in a way that's sustainable and could one day be profitable. And I think certainly, particularly in a US context, you see what's happening with SoftBank globally and others. I think the rivers of sort of unlimited capital to throw at growth at all costs, with a view that one day we'll win market share and then worry about unit economics and building a profitable company at that point. I think that playbook is struggling, and if not over, and it's certainly something we stay away from. So I think you're right. At the moment, investors are sharp focus on growth, and to the extent you're losing money on acquisition, really proving out metrics like payback period and ensuring effectively that every dollar you spend on sales and marketing, it might take a bit of time to earn that dollar back, but you want to be really sure you're earning that dollar back in quick time. And I think those kind of metrics are now coming to the fore more recently than ever. So totally agree. The bar's a little higher, and I think focus is more on like capital efficiency as a context.
On a funny side note, about a week ago, did you see the Doordash? I was looking at that, just going, I didn't. For me, it's someone that's I couldn't believe that those sort of things were actually taking place. I'm trying to think of the exact title of the article so that people can go and reference it. But there was an article about Doordash, and effectively it was the owner of a pizza shop who realized that he could buy his own pizzas via Doordash for $16 when he actually sells them for $24. So it was more profitable for him to basically buy his own pizzas via Doordash and then sell it to customers. I thought, genius.
Yeah, it is amazing what's happening out there. And I think, certain industries, it'll be interesting to see what happens in food delivery, to be honest. I don't think any of them have really cracked that. And, you look at the Uber Eats model, for example, and, there's been years of promise of profitability and getting back to it. And, I guess now there's more fundamental questions as to whether they'll ever build a profitable economic model to support the big market share they're building. So, I agree. I think the days of building a business on the back of venture funding with the hope of having a profitable company one day, I think those days are, if not gone, they're certainly reducing in number.
Yeah. Now, as a final question, because the reality is I could just keep selfishly asking you questions all day long. As a final question, what excites you most about what you're looking, when you're thinking about this next sort of 3, 6, 12, 18 months? Obviously, there's all stuff we fear about. Anyone can talk about that. That's easy, right? What are you actually excited about?
Yeah, I think there is opportunity out there, and particularly in our space. Again, people in their personal lives have faced great dislocation and forced to change behaviors personally. And I think there's an acknowledgement and generally an open-mindedness towards new technology and software and change. And I think for that, there's good opportunity for Aussie founders in particular areas. And I think a lot's been said around a recession or a downturn being a good time to start a business, and I think a lot of people are saying that. Maybe that's true, maybe not, but I think certainly there will be sort of a boom in Aussie entrepreneurship over the next 12 to 18 months, as a lot of people start going towards the startup ecosystem, working on a business opportunity they've thought for a long time about. And I guess that's what excites me really is finding the next waves of your SiteMinders, your Deputies, your Atlassians. And it's never been a better time in terms of funding and government support to start a business. So hopefully we can find a few more over the next 12 to 18 months and get to partner with great Aussie founders. That's probably the most exciting thing.
Brilliant. Well, Justin, thank you so much for your time and thank you so much for your input. I hope we can do another session because there's actually quite a few topics because to me, I'm fascinated by that B2B sales area. So at some stage, hopefully we can do another session sort of drill more into that. But thank you so much for your time.
Anytime. And likewise, Steve, great to chat.
Thank you.
See ya.
See ya.